What is happening, crypto fam? Welcome back to Bitcoin Bulletin, your ultimate source for the news that moves the market. We are diving headfirst into a whirlwind of updates today, and trust me, you do not want to miss a single second of this. The pace is blistering, the insights are game-changing, and if you're serious about staying ahead, you're in the right place. Get ready for the inside scoop that'll keep you on the edge of your seat. We've got breaking developments that are reshaping the landscape, and we're here to break it all down for you, fast and unfiltered. From the whispers in the executive suites to the seismic shifts in global finance, this is your front row seat to the revolution. So buckle up, because the future of finance is unfolding right now, and we've got the exclusive breakdown. Let's get into it. First up, we're talking about a major figure making waves with their stance on Bitcoin. Is this a sign of things to come, or just talk? We've got the details on why a prominent founder's advocacy is setting the crypto world abuzz with speculation, even as the concrete actions remain a topic of intense discussion. What does this mean for the market's perception and future direction? Then, we're shifting gears to a massive institutional trend that's signaling a profound shift in how capital is being allocated. We'll explore how the rise of Bitcoin ETFs is not just a financial instrument, but a powerful indicator of institutional conviction, even when the market's hit with volatility. This could be the dawn of a new era for asset management and long-term investment strategies. Next, we're heading east to see how financial powerhouses are making bold moves in the crypto space. We're diving deep into how a leading Hong Kong firm is placing a significant bet on crypto ETFs, showcasing a growing institutional confidence that's hard to ignore. What's driving this strategic allocation, and what does it signal for the broader Asian market? And finally, we're touching base in South Korea, where institutional adoption of Bitcoin is reaching a critical juncture. We'll unpack what this strategic inflection point means for the entire Asian crypto market. This is massive, folks. Make sure you smash that like button, subscribe if you haven't already, and hit that notification bell so you never miss an update. Let's go. Founders' Bitcoin talk fuels market buzz. A prominent founder's vocal support for Bitcoin is creating a significant stir across the financial world, sparking widespread speculation about potential future actions. While the advocacy is clear, the market is keenly watching for concrete steps to back these pronouncements, leaving many to wonder about the true impact of this high-profile endorsement. This situation highlights the delicate balance between public statements and tangible investment in the fast-paced digital asset space, where every word from influential figures can sway market sentiment and investor behavior. This development is particularly relevant in the current market climate, where institutional interest in cryptocurrencies is steadily growing, and the actions of key opinion leaders can significantly influence adoption rates and price movements. The founder's stance, though currently lacking in specific investment disclosures, represents a potential catalyst for increased mainstream acceptance and could signal a shift in how significant financial players engage with Bitcoin moving forward. The narrative around this advocacy is unfolding against a backdrop of evolving regulatory landscapes and increasing institutional adoption of crypto-related financial products, making any endorsement from a figure of this stature a critical point of observation for investors and analysts alike. The founder, whose identity and specific company are not detailed in the initial reports, but whose influence is undeniable, has reportedly been vocal about the potential of Bitcoin as a store of value and a medium of exchange. This consistent advocacy, however, has not yet been accompanied by any publicly announced direct investment in Bitcoin or related financial instruments. This has led to a dichotomy in market perception. Some see the vocal support as a precursor to significant future investment, potentially signaling a major influx of capital, while others view it as mere rhetoric, lacking the substance of actual financial commitment. This ambiguity is fueling a speculative environment, with traders and investors trying to decipher the founder's true intentions and the potential market implications should they decide to translate their words into action. The ongoing discussion revolves around whether this is a strategic play to influence market sentiment or a genuine belief that will eventually manifest in substantial financial backing. The lack of concrete action leaves room for interpretation, with some analysts suggesting that the founder might be waiting for specific market conditions or regulatory clarity before making a definitive move. This waiting game, however, is itself a form of market influence, as the anticipation of potential action can impact trading patterns and investment strategies. The founder's public platform amplifies these discussions, turning a potentially private investment decision into a subject of widespread public interest and debate within the crypto community and the broader financial industry. The situation underscores the power of influential voices in shaping market narratives and the constant scrutiny that accompanies significant figures in the evolving world of digital assets. The market is actively dissecting every statement, looking for clues that might indicate the timing and scale of any potential investment. This speculative frenzy is a testament to the founder's influence and the crypto market's sensitivity to endorsements from major players. The community is abuzz with theories, ranging from the belief that the founder is accumulating quietly to the possibility that they are preparing to announce a major corporate investment. The absence of definitive action keeps the narrative open, allowing for various interpretations and strategies to emerge. The situation is closely monitored by institutional investors, venture capitalists, and retail traders alike, all eager to understand the next moves of such a prominent figure. But what happens when this kind of advocacy is backed by serious financial muscle? We're about to find out as we explore how major institutions are making their own bold plays in the crypto arena. ETFs showcase institutional trust amid market swings. The increasing adoption of Bitcoin exchange-traded funds, ETFs, is emerging as a powerful testament to institutional confidence in the cryptocurrency, even as the market navigates periods of significant volatility. These financial instruments are not merely new products. They represent a fundamental shift in how traditional finance views and engages with digital assets, signaling a potential new era of capital reallocation and a strengthening of long-term bullish positioning. This trend is occurring against a backdrop of fluctuating market conditions, where Bitcoin and other cryptocurrencies have experienced considerable price swings. Despite this inherent volatility, the sustained inflows into Bitcoin ETFs suggest that institutional investors are looking beyond short-term price movements. They appear to be focused on the long-term potential of Bitcoin as a digital store of value and a potential hedge against inflation, much like gold. The structure of these ETFs, which often hold the underlying physical asset, provides a regulated and accessible way for large institutions to gain exposure without the complexities of direct digital asset management, custody, and security. This accessibility is crucial for entities that operate under strict compliance and risk management frameworks, making ETFs a preferred entry point into the crypto market. The growing conviction among institutions is a critical development. It signifies a maturing of the crypto market, with increasing integration into traditional financial systems. This integration not only validates cryptocurrencies as a legitimate asset class, but also contributes to greater market liquidity and price discovery. As more institutional capital flows into Bitcoin through these regulated channels, it can create a more stable market environment, potentially dampening extreme price volatility over time. Furthermore, this trend indicates a strategic reevaluation of investment portfolios, with institutions actively seeking to diversify and capitalize on the growth opportunities presented by digital assets. The reallocation of capital towards Bitcoin, driven by ETF adoption, could have far-reaching implications for global financial markets, potentially influencing monetary policy discussions and the broader understanding of asset diversification in the 21st century. Analysts point out that this move by institutions is not just about chasing returns. It's about strategic positioning for a future where digital assets play a more significant role in the global economy. The robust performance of Bitcoin ETFs in attracting significant assets under management further bolsters the argument that institutional conviction is translating into tangible, long-term investment commitments. The impact of this institutional conviction is being felt across the market. Analysts are noting that the steady demand from ETFs is helping to absorb selling pressure during downturns, providing a floor for prices. This, in turn, fosters greater confidence among retail investors and smaller institutions. The narrative is shifting from Bitcoin as a speculative fringe asset to a recognized component of diversified investment portfolios. This growing acceptance is a key driver for the continued development of crypto infrastructure, including enhanced custody solutions and regulatory frameworks, which further solidify the position of digital assets within the mainstream financial ecosystem. The sustained interest in Bitcoin ETFs is a clear signal that institutions are not just dabbling, but are making strategic, long-term bets on the future of digital finance. Speaking of strategic bets and institutional confidence, our next story takes us to Hong Kong, where a major firm is making a significant move into crypto ETFs. Hong Kong firm bets big on crypto ETFs, signals institutional confidence. A prominent Hong Kong-listed financial services firm, China Financial Leasing Group, has made its inaugural foray into digital assets by investing in physical Bitcoin and Ethereum exchange-traded funds, ETFs. This strategic allocation marks a significant milestone, underscoring a growing wave of institutional confidence in cryptocurrencies and reflecting a calculated response to prevailing macroeconomic trends, including the depreciation of the US dollar. The company's recent interim results for the 6 months ending June 30, 2025, reveal a substantial financial turnaround, with a net profit of HK $1,836,000, a stark contrast to the HK $8,679,000 loss recorded in the same period the previous year. This profit surge was primarily driven by gains on financial assets and an overall increase in revenue, providing a solid foundation for its new digital asset venture. The decision to invest in ETFs that hold physical cryptocurrencies rather than synthetic products highlights a preference for custody-backed exposure, a strategy designed to mitigate counterparty risks and align with the robust infrastructure standards increasingly demanded by institutional investors. This approach signals a mature understanding of the digital asset landscape and a commitment to secure, regulated investment pathways. The timing of this investment appears deliberate, coinciding with a period of strong upward momentum in crypto markets and broader economic shifts. The weakening US dollar, in particular, often correlates with increased investor interest in alternative assets like Bitcoin, perceived by many as a hedge against currency devaluation. The strategic allocation to physical ETFs means that the firm's investment is directly tied to the underlying assets, enhancing transparency and potentially driving demand in the spot markets. This move is seen as a positive indicator for the broader institutional adoption of digital assets, potentially encouraging other publicly listed companies in the region to explore similar investment opportunities. As regulatory clarity and sophisticated custody solutions continue to evolve, particularly in Asian markets, such investments are likely to become more common, further integrating cryptocurrencies into the global financial system. The company's financial health, demonstrated by its profit turnaround, provides a strong backdrop for this pioneering investment, suggesting that the move is well supported by its overall business performance. The implications of China Financial Leasing Group's investment extend beyond its own portfolio. By choosing physical ETFs, the firm contributes to the direct demand for Bitcoin and Ethereum, potentially improving market liquidity and price discovery. This action reinforces the legitimacy of digital assets within traditional financial frameworks and sets a precedent for other firms looking to gain exposure. While the investment does not involve direct purchases from cryptocurrency exchanges, it represents a significant endorsement of the regulated pathways now available for institutional participation. The market is watching closely to see if this move will indeed spur further institutional demand and liquidity, especially given the increasing institutional flows into regulated ETFs globally. The strategic decision to prioritize custody-backed exposure is a clear nod to the importance of security and regulatory compliance in institutional investment strategies, a trend that is expected to shape the future of digital asset adoption. However, the investment is not without its risks. Potential challenges include shifts in regulatory policies, the inherent volatility of the ETF market itself, and ongoing macroeconomic uncertainties, particularly concerning currency fluctuations. Despite these considerations, the firm's allocation reflects a broader institutional trend toward regulated and custody-backed digital asset strategies. As the market infrastructure and regulatory environments mature, especially in key financial hubs like Hong Kong, similar moves from other institutional players are anticipated, which could significantly reshape capital flows and the pace of institutional adoption in the crypto space. Now, as we look at how major financial players are embracing digital assets, let's turn our attention to South Korea and see what's happening on the institutional front there. South Korea's institutional Bitcoin adoption marks key Asian market inflection point. South Korea is emerging as a critical hub for institutional Bitcoin adoption, with recent developments signaling a strategic inflection point that could significantly influence the trajectory of Asian crypto markets. This growing institutional engagement is not just about investment. It represents a broader acceptance and integration of digital assets into the financial mainstream, driven by a combination of technological advancement, regulatory clarity, and evolving investor sentiment. The landscape in South Korea has been shaped by a dynamic interplay between a tech-savvy population eager to embrace new financial technologies and a regulatory environment that, while initially cautious, has progressively adapted to accommodate the burgeoning crypto sector. Recent policy adjustments and the establishment of clearer guidelines for digital asset businesses have paved the way for increased institutional participation. This includes the exploration and adoption of various crypto-related financial products, with Bitcoin at the forefront, by established financial institutions, asset managers, and corporations. The focus is increasingly shifting towards regulated avenues for exposure, such as approved digital asset exchanges and potentially, in the future, Bitcoin-denominated investment vehicles that meet stringent local compliance standards. This institutional push is driven by several factors. Firstly, the potential for high returns, coupled with Bitcoin's increasing recognition as a digital store of value, makes it an attractive asset for portfolio diversification. Secondly, the development of robust and secure custody solutions has addressed a major concern for institutional investors, mitigating risks associated with asset security and management. Thirdly, the growing understanding of blockchain technology and its underlying principles is fostering greater trust and confidence among financial professionals. As more South Korean institutions delve into Bitcoin, they are not only seeking financial gains, but also aiming to understand and leverage the technological innovations that underpin this asset class. This educational and strategic engagement is crucial for long-term market development and stability. The trend signifies a maturation of the market, moving beyond speculative retail trading towards more sophisticated, long-term investment strategies. The impact of South Korea's institutional adoption extends beyond its borders. As a major economic player in Asia, its embrace of Bitcoin can serve as a powerful catalyst for other countries in the region to reevaluate their own approaches to digital assets. The country's forward-thinking regulatory stance and its thriving digital economy position it as a potential leader in shaping the future of crypto finance in Asia. Increased institutional participation can lead to greater liquidity, enhanced market integrity, and the development of innovative financial products tailored to the needs of both institutional and retail investors. This strategic inflection point suggests that Asia, and particularly South Korea, is poised to play an increasingly significant role in the global cryptocurrency ecosystem. The focus on regulated adoption ensures that this growth is sustainable and contributes positively to the broader financial landscape, fostering innovation while maintaining stability and investor protection. The move towards institutionalization indicates a long-term commitment to integrating digital assets into the core of financial services. Market participants and analysts are closely observing these developments, anticipating that South Korea's proactive stance could set a precedent for other Asian nations. The successful integration of Bitcoin into institutional portfolios within a regulated framework could unlock substantial capital flows and accelerate the acceptance of digital assets across the continent, solidifying its position as a key player in the global digital asset revolution. And that brings us to the end of our deep dives today, but we're not done yet. Let's quickly recap the biggest stories that have been making waves. All right, that's a wrap on today's crucial updates. We saw a founder talking Bitcoin but not acting, institutional convictions solidifying through ETFs, Hong Kong firms making big crypto ETF bets, and South Korea hitting a key point in its institutional Bitcoin adoption. What a day! Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell so you never miss a beat, and let us know your thoughts in the comments below. And make sure to follow us on all our social channels for even more insights. We'll catch you on the next one.